Hi, everyone. This is Bruce Mandel with Young Professional Investors, the senior advisor to the group. And today, joining me is Austin Cassidy from Vancouver, Washington, and Austin Rose from Dallas, Texas. Unfortunately, our other colleagues from Texas and Minnesota are unable to make it today, but we believe we'll have an information-filled discussion, and hopefully you'll have an opportunity at some point to get in contact with these people and touch base with them. So presenting today will be Austin Cassidy. He's got expertise in the residential real estate and in beginning investing in residential real estate. So Austin, welcome. How are you today?
Thanks, Bruce. Yeah, I'm doing well. How about yourself?
I'm doing well too. And Austin Rhodes, who is on the road, literally in somewhere yet to be named in Texas. Austin, welcome. How you doing?
Thank you. Doing well. Doing well.
Good. So today, as I'd mentioned, our conversation is being led by Austin Cassidy, and I believe it's entitled "The Difference or the Gap Between Buyers and Sellers Right Now and What's Going On in the Market." So, Austin Cassidy, take it away. Give us some insights, please.
Yeah. So I recently wrote an article for YPI, and you can reference that if you're watching this. The article should be out as well. And it just addresses bridging that gap between buyers and sellers right now in the marketplace and how investors can navigate that. So what we're seeing in today's market is sellers are really holding tight to the high prices of 2022, the real estate boom. Maybe they even got in partway through that acceleration cycle of prices, and they just think that their home is worth three-quarters of a million, a million, $3 million, and in reality, maybe half a million. Whereas buyers, they're seeing higher borrowing costs, they're seeing different economic factors affecting their own pockets, and they feel this impending correction that isn't happening at this point. So there's a gap between these different parties of a real estate transaction, and investors are feeling that as well. But because of the creativity that investors may be able to take in their entries and in their exit strategies, they can actually navigate this gap and create a profit.
Interesting. So, do you think that is primarily regional, or do you think that's going on all over the country?
I think some regions feel it more than others, just like in any market cycle. However, lending costs are a nationwide thing, inflation's nationwide, and everyone wants as much as possible for their house. So, Austin, correct me if I'm wrong, but you guys are feeling a similar gap there in Texas.
Yeah, for sure. And it's not on every property, right? I mean, the ones that are really hot, move-in ready, the works. Those sellers are still getting what they're really expecting, but pretty much anything else, there's definitely a gap and disconnect between most buyers and sellers.
Interesting. So we have the central part of the country in Texas, and actually a very hot market. And we have the Pacific Northwest, the Portland, Vancouver, Seattle area, which is also a very hot market. And they're seeing the same kinds of things. So as you are talking to the seller side, what is the primary objective or objection that sellers are having, and how do you think you have to address that in this market?
Yeah, I think one of the biggest objections is everyone wants the highest value for their home and what's going to net them the most. So if it's not just price, it's also going to be terms. And with the recent National Association of Realtors settlement that happened, people are starting to look at buyer's agent commissions as well as the net into their pocket. Although right now we are seeing a lot of sellers still offering a buyer's agent commission in the transaction, there are people that are asking about it. And people do get, selfish in the fact of what is my net? And they always want to look out for them and their back. And I want to do that as well. But it's also coming alongside the seller and taking those objections and finding ways to get them the best financial result from that sale.
So, as a real estate agent, technically, unless you're assigned as a buyer's agent, is it not your obligation to represent the seller? Is that not correct anymore? Is that standard across the country, or not?
Can you rephrase that?
So the question is in when dinosaurs ruled the earth, when I was making my first purchase in the 70s, the real estate agent represented the seller. And unless you had a specific agreement with the purchaser, you in fact quid pro quo represented the sellers. Is that still the case, or is this what that buyer's agent issue is all about?
It's kind of what this buyer agent issue is all about. It's creating that clear line between who represents who. Previously, there was kind of implied agency between a buyer and a buyer's agent where, yeah, maybe there's not a contract in place, and then the buyer's agent commission is coming out of the seller's net proceeds. So if the seller's paying the buyer's agent, then who's the buyer agent actually supposed to be looking out for? Now we're required to be signing buyer's agency agreements with all of our buyers before even showing homes. And it's very clear cut on who represents who. And the sellers can still offer compensation to these buyer's agents. However, there is an agreement between buyer and buyer's agent at this time, clearly outlining who they work for and what they do.
Interesting. Would that be the same case in Texas, Austin Rhodes?
Yep. Yes, sir. Yeah. To my knowledge, that's the same across the country. I believe it was back in the early 90s when it changed from what you were describing of basically there was no buyer agency and it was just the listing agent that represented the seller and then they kind of helped the buyer along. In 90s, that's when they brought along buyer agency to where there was a designated agent to represent the buyer and look out for their best interest. Now with the new lawsuit, the biggest thing with it is transparency. They just want to make sure that buyers understand who's representing them, what their obligations are financially, what the fees are. That's really where a lot of this come from is transparency.
Got it. So let's walk through a scenario. Let's say I'm a new buyer, right? And I'm looking at purchasing a home. What would that relationship or process look like with you, Austin Cassidy, as my buyer's representative agent? What would you
Yeah.
be doing and helping me with?
Yeah. So from first contact, we're going to sit down. I have a guide that I take all of my buyers through. It's a home buyer's guide. It has a wants and needs analysis. It walks through the timelines of transactions. Really, it's your workbook to work through the process. But we're going to sit down. We're going to have a conversation, talk about what you're looking for in your homes, and be able to get you connected with lenders and preferred lenders in the area if you need one, and really just finding your motivations of why you need or would like to buy a home. At that point, if you're comfortable and if we plan to work together, we're going to sign that buyer's agency agreement we've been referring to. And as we're kind of going through your home search, we're going to be refining that search. Might start a little broader. And then, hey, that extra lot size is maybe out of your budget. Well, that's something maybe you're willing to give up. So we start to look at maybe a smaller lot size. And we're going to find that, I really don't like those terracotta floors versus luxury vinyl or whatever it may be. We're going to really refine that search and then find you that home you've really been looking for within the price point.
I see. So let's say we go through a successful process. So you as my buyer's agent, how do you get compensated now under the new rules of buyer's agency?
Yeah, so buyer's agency isn't it's not publicly displayed on our multiple listing service systems. So say you came to me and said, yeah, I think your pricing is fair, your compensation is fair. However, I can't come out of pocket on that. We'll have the discussion to say, well, are you willing to look at homes that aren't offering a buyer's agent commission, or do you only want to look at homes that are offering that or sellers are offering that? So then you say, maybe I'm only willing to look at homes that are offering a buyer's agent commission. We will then have a phone call with the listing agent prior to going and seeing homes, and we can just ask them, and they tell us, and that's active for 3 days, at least in our area, of an acceptable offer. It's always negotiable throughout the transaction. So say you offered $10,000 less than their asking price, they can come and make that buyer's agent commission a negotiation point, and then we just have to chat again.
I see. So it sounds like as a representing a buyer, you as the agent could wind up with less or nothing potentially in that whole transaction. Is that correct?
Potentially, and it's a business relationship in a way.
Got it.
We're taking you on as a client, and we're signing that same contract as well, saying we're willing to represent you for this amount. So if you come to me and say, I'm going to pay you $10, but we're going to go look at these 30 homes, I'm probably not going to do it.
Right.
this is one thing people need to recognize is it's not just a commission, it's not just a percentage, it is real estate agents' income. So when people actually hear that word income and compare it to their salary, they recognize that it's not, it may be a large lump sum, but we may be working with you for 6 months, 12 months.
Got
And
it.
if you want a good agent, you likely are going to pay for it.
Got it. That's very insightful. I didn't have any idea that was going on right now. So let me flip the tables onto you, Austin Rhodes, and say, now I'm selling my home. Given the new rules, what kind of process are you going to go through to create a good environment for me and get my home sold?
Yep. Yeah. So, I think kind of goes back a little bit to what I was saying about how it depends on the property, how move-in ready, how hot the property is. If it's going to be a very desirable property that ideally there's going to be a lot of buyers interested on it, we might, from a seller's perspective, be a little bit more aggressive in what we offer from a commission standpoint. Maybe don't commit to one at all at first and wait to see what offers come in and the overall net they provide the sellers. If it's a house that may have some challenges in selling, backs up to busy road, water tower, railroad track, has a weird floor plan, needs a ton of updating, what have you, and not such a great area, it might be a lot more difficult and competitive to try to sell that house. So we might, as sellers, want to be more aggressive with what we're offering to help incentivize buyers to come into the door. Like I can give an example, as Austin Cassidy was mentioning, that if a buyer is not able to come any additional amount out of their pocket to pay for their buyer's agent's commission, and a seller's not willing to offer the full fee that the buyer agent is requiring, then it just might not be an option for you. And I've had on multiple of my listings where a buyer has not come through to look at the house because we weren't at first offering 3% commission. And so there is a level of risk of not offering the 3% commission in that example, because if people can't come out of pocket, it's just not an option for them and they have to go look at another house. So if you're going to have those extra challenges, as far as being able to sell your house, you have a lot of competition or whatever, that might be something that we really think about offering to make your house more attractive than the other three in your neighborhood or what have you.
I see. So it becomes really sounds like a real business process, both on the selling side as well as a business negotiation agreement up front on the buyer side. So, do you guys think that this new rule is actually exacerbating or making it more difficult in the current marketplace and creating a bigger schism between pricing for buyers and pricing for sellers in this current marketplace? Or do you think that just really doesn't have much to do with it right
I think it does to a degree and to certain parties, right? In my opinion, and this just rolled out, so we'll see how everything continues to play out and everything. But to me, the people who are going to be most affected by this are first-time home buyers, veterans, people that don't have a lot of cash to play with, right? That are needing typically to take advantage of first-time home buyer programs, FHA, VA, i.e., government-backed loans that have much lower down payments amount, that they just a lot of times simply don't have the cash to be able to pay their buyer's agent an additional commission amount if a seller's not willing to offer it. So I think it will limit some of the houses that those people can see. And I think like anything, it's going to be like a pendulum swing, right, where we find the equilibrium. I think there's going to be some people at first, sellers, that are like, oh yeah, I don't have to offer anything, and then they get no traction on their house, they don't get the kind of offers they want, then they might be more willing to consider paying a buyer agent commission. And I think same with buyers too. If they're not getting either the representation that they need, or they're not winning any houses, then they might consider paying an additional buyer's agent commission. It might mean that they lower their price, but I think there's going to be some adjustments in there overall. For buyers that are a little bit more advanced in their careers and their financial situations, I haven't seen that be as much of a factor. better to them so far.
Right.
We'll see how it
Okay.
continues to play out.
Interesting. So let's loop into a couple of other things that I know that the both of you have expertise in. So Austin Cassidy, you've built out this whole buyer's plot process and program, et cetera, that people, whether they be first-time home buyers or in move-ups, it's really almost like a cookbook that they can go through to get themselves going on it. So as you look at that, what are the key factors in there that you think are important, and what are the tools that you're using to get those new starts and first move up people going?
Yeah, I think especially for, your first time home buyers, am I hearing you correctly in asking kind of about them, or are you saying just getting the people from the door to actually closing a transaction?
Yes, the startups as well as the ones to get them to close it. Yes.
Yeah. So for first time home buyers, I think the number one thing is just the education piece within that workbook. Because what I find a lot of times is first time home buyers, especially with prices, interest rates, borrowing costs, all of that, they may be a little more flexible on, their wants and needs. They have their absolute needs, but they just want to get their foot in the door, start building equity, be a homeowner. So the education piece, timelines of transactions, who they should be connected to, vendor lists, everything like that, really kind of puts them ahead. So when they have the education already and then walk into the marketplace, they're ready to pull the trigger on that home, put in the offer, and be educated about the process, not have fear going into it, but feel like they're equipped to be there. And then in terms of, someone that has bought a house before, maybe knows the process, but still wants, a workbook to work from to make sure they're not missing anything, it offers that as well. They can walk through, what do I want? What do I need? They can sit down with a spouse, with someone else or a partner in the deal and kind of compare their workbooks and make sure they're kind of on the same page. It allows me to sit down with them and have a rubric of what we're going to be talking about, no surprises, and kind of have that expectations conversation up front. So once again, they can walk into a house in a situation confident that they know what they're looking for and know that they're well equipped for that transaction.
That's fantastic. That's really good outline. Thanks for that. So you can get to Austin Cassidy, you can get that information. Austin Rhodes, you have had, and your family is known for helping a lot of people who are in the investment side of home acquisition. As you think about this current market in the Rhodes Group, what are the top 3 or 4 things that you folks are advising people at in the marketplace today in the Dallas region to be able to tell them to, hey, these are the things you need to think about as you go into making an investment acquisition?
Yeah, for sure. So, I think definitely in DFW, Dallas Fort Worth area, but probably pretty much everywhere around the country. I think the biggest thing is understanding what areas have the highest level of demand, because overall, that's what's really going to drive appreciation, higher resale, higher appreciation. I just said that, but that's really what drives everything, right? If you go and buy a house that's in a non-desirable area, for example, in DFW, public schools that you feed into is extremely important. And so if you buy a house that is in an area that's not good, the schools aren't strong, it's further away from jobs and everything, you're going to have a much more difficult time in general of selling, of reselling and being able to sell at top dollar. Whereas if you buy somewhere that has a lot more demand, you have a higher probability of drawing in multiple offers, getting higher prices, much stronger terms for your sellers that will help eliminate certain risk of the deal falling through and provide much higher level of certainty that you're going to close at the price that agreed upon. So I think that'd be the biggest thing that I drive home with my clients and especially investors, because if you're in a bad location, I mean, like, the age old saying, location, 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 you're going to have a hard time selling. So I think that is number one thing with it. Also, right now, with again, at least in DFW, it's much more of a buyer's market right now. We have a pretty high amount of inventory that's on the market. And for the most part, whenever you're leading up to an election, there's a lot of uncertainty in the market. And so most people are too nervous to do anything. Honestly, right now, you can get some pretty good deals overall. Not that sellers are giving away their homes for free, but you're going to have a lot more negotiating power as a buyer right now in this market than waiting 3, 5 months until spring when ideally the interest rates are supposed to lower a little bit We have a certainty of whoever is elected, and hopefully the overall economy has improved by that point. But I think that you're going to be in a much better position overall now as a buyer, even if you need to sell and then buy. I think you're going to end up saving more money and getting a better house now than waiting to win. There's a lot more competition out on the market.
Wow, great synopsis, gentlemen. Thank you very much. Well, we're running to the end of our time here, and I really appreciate the insights that both of you provided. Here at YPI, our objective is to find young professional investors, to work with our young professional investors, and developing some relationships so that long term the entire group becomes successful and over time may even earn some friendships along the way. So, gentlemen, thank you very much for your time today. You can catch us at ypi.com or youngprofessionalinvestors.com. Austin Rhodes, Austin Cassidy, thanks for your expertise. I enjoy working with you both.